Hey guys, it's that Dividend guy coming at you with another dividend investing video. Happy Wednesday. Hopefully everybody had a GGD. We did not, but that is a-okay. Let's take a look. We're still up almost to 19k here. I believe we were at 17.8 yesterday, so I think we're up a grand overall, which seems really high. Maybe I'm misremembering, but let's take a look at the overall portfolio performance. So today we're down about 245. The week we're down about 1,000. Month we're up 426. 3 month mark we're down about 2,500, which is still awesome because that means we have a $20,300 portfolio right there. It's pretty nice. For the year we're down 275, and all time we're down 607. So pretty much we're down on every mark except the month mark, but that's okay. It means that there's deals in the market. First, let's look at O. Realty income, we are up 43 cents today. It's paying us a dividend of $3.50 this month because it's a monthly payer. 15 shares, $7.87 equity. $45.38 is our average cost. And then about 4% of the portfolio is in realty income. Realty income. Sorry. Love the stock so much I can't pronounce it. Up $6 today, up 106 total, so up 15% on this holding alone. Then MO, one of my dividend deficients, we have 100 shares, $3,500 of equity, $45.18 is our average cost. We're cost down averaging on this one automatically now every time it pays. About 20 or 19% of the portfolio is in MO, down 106 today, down 945 or 943 total, which is fine. It's a dividend king. Don't mind being down on it. And this is one of those, and I'll explain it real quick because I had to explain to somebody. So when I say dividend deficient, it's not the dividend yield. So what I mean is I now have enough shares, which I think it's about 45 to 47 shares. It might be less now because the price is lower, so you need less shares to be dividend deficient in it. But what I mean when I say dividend deficient is I have enough shares of Altria that when it pays me every 4 months, I have enough money in the stock, or I have enough shares of the stock to buy another one of itself. So when Altria pays me $82, and it paid last month, so in 3 months. So next time Altria pays me, if it stays around these levels or my average cost at $45, with the extra dividends coming in this month, I have enough money to buy 2 shares of Altria every time it pays me. So that's what I mean by dividend deficient. I have enough money in the stock to buy another share without having to add any money to the position anymore. So Altria is dividend deficient. Then we have Coca-Cola, another king, 20 shares, $895 of equity, $51.26 is our average cost. Again, about 5% of the portfolio is in Coca-Cola, about the same size position as Realty Income here. Down $13 today, down $130 total. Again, don't mind being down on a dividend king. That means I can cost down average, and I'm a huge fan of Coca-Cola. Next, another dividend king, FRT. 1 share, $73.31 is our equity, $113.40 is our average cost, so we could cost down average quite nicely with this one. About 0.4% of the portfolio is an FRT. We are down $3.93 today, down $40 total. So last month I bought Exxon, which I should have bought something like AT&T or maybe Lowe's. This month I bought Wells Fargo. I bought that today. I'll show you that when I get down there. But I was going to buy Walgreens, but Wells Fargo has like $20 of upside in the stock. Plus it pays a 51-cent dividend, so it pays about the same as AT&T, and it's $25 right now, so I'll jump into that more. But I changed my buy today. But FRT, we're down on that, not a big deal. PepsiCo, 1 share, $130.78 is our equity, $131.54 is our average cost. About 0.7% of the portfolio is in Pepsi. This is close to dividend king status. We're down 89 cents today, down 76 total. Then we have Disney. I did hear that they suspended their dividend. I'm sure that is on, maybe it's not. Okay. I thought it would show the dividend being suspended, but that's fine. We're down today on Disney. Surprised we're not down more, to be honest, because them suspending their dividend is kind of huge. A lot of people were talking to me, asking me today how I felt about it. I saw a lot of it on Instagram when I was just scrolling through. We have a lot of Disney shareholders out there, a lot of Disney fans. But here's the thing. This is more of a growth company. It's not really about the dividend for me, because it only pays twice a year, so it's down over the last 5 years. But it only pays twice a year, and it's 88 cents. So And for $100, like let's say, like I said, Wells Fargo, it's $45 stock. I could buy 2 shares, get $1.02 per payment, and get it twice as much because it pays 4 times a year. So for me, Disney just isn't that good of a dividend stock. Like, it's a good growth stock. It's grown its dividend pretty well, but the fact that it only pays out twice a year makes me less of a fan of the stock for a dividend purpose. But I do love Disney. It's one of my favorites. It's in my top 5 stocks of all time because I'm such a Disney fan. But I think it would take approximately 50 Disney shares, I think, something like that, to be dividend efficient. And the goal is to make Disney pay for my Disney Plus, which that wouldn't be too hard. So anyways, guys, huge Disney fan here. And sorry if that suspended dividend bugged you, but I'm not in the stock for the dividend anyway. This is one of those. I think this is the only stock that I don't care about the dividend with because I'm such a big fan of the company. So we're down 72 cents today, down about $10 total. Now when we're into the second month of the year, so Lowe's, which just paid me a dividend today of $1.10, I believe. We have 2 shares. It's a Dividend King. 219.16 is our equity. 186 is our average, or $100.86 is our average cost. 1.16% of the portfolio is in Lowe's, down 114 today, up 1744 total, and up 8%. Then AT&T, a Dividend Aristocrat, way below my average cost here, which is great news. 65 shares. It is dividend efficient at my average cost, so now it's dividend efficient with some spare. With money to spare, $1,880, $1,880.45 is our equity. Sorry, $31 is our average cost. About 10% of the portfolio is in AT&T, and it is dividend efficient. So I will no longer have to put money in the stock to buy another share, but I probably will because I will eventually because I do like AT&T. $31 is our average cost, and about 10% of the portfolio is in AT&T. That will go up. I'm a big fan of AT&T, and it has a massive dividend yield. Down $52 today, down $134 total. Abbvie, another Dividend Aristocrat. It is paying me $70.80, so as you can see, I'm like $15 off from being $15 off from being dividend efficient. So at one point, at my average cost, I'm pretty close to being dividend efficient, and the extra cash from AT&T or Lowe's or SKT, I would be dividend efficient in it. But now that it's run up so high, I'm not dividend efficient. So I have 60 shares, $5,100 of equity, $72.22 is our average cost. 27% of the portfolio is in Abbvie, up $13 today, up $8.02 total. And this is one of those that I bought it when it's really low and it's fluctuated a little bit, and I wanted to buy more shares. I just didn't have cash at that point in time. So I missed an opportunity, but there will be more. I do love Abbvie. I think it's a great healthcare stock, and it is an aristocrat, so it does have the status that I'm looking for. Then SPG, I have 3 shares. 165.21 is our equity. 52.12 is our average cost. So we're already up decently on the stock, only a couple bucks. I thought it was up to 65. Down $16 today, or 9%. Up 8.86 total, or 5.6%. Then American Express, my pick for the credit card stocks. As I said, all these companies except SPG, I didn't buy that quick or early enough in the month last month to get the dividend. But American Express will be paying me 3 shares. 252.81 is our equity. 97.73 is our average cost. So we can cost down very well on American Express. 1.3% of the portfolio is in American Express. Down $7 and change today. Down $40 total. SKT, another dividend efficient. They are paying me, which is awesome, 35 cents a share, so $9.30 is our average cost, is our dividend payment, so I am dividend efficient in SKT. 26 shares, 150.70 is our equity, $10.78 is our average cost, so we could cut our average cost nearly in half here. And about 1% of the portfolio is in SKT. I want to keep this one pretty small. It is an aristocrat, but it's in kind of a riskier sector than I'd like to be in. I bought it because of the status and because it's got a really good track record for dividend increases. But it's not my favorite of the bunch. So I want to keep this at maybe 1 to 4% of the portfolio, not a very big position. But it will gain since it's dividend efficient, it will buy itself. So it might become a little bit bigger, but I will make sure that it stays in that 1 to 4%. Down $13 today, down $125 total, or almost down half. It's almost half the value I bought it at, which is actually really good for a dividend investor. Then 3M, we're down to 36912, 2 shares, 292.20 is our equity, 147.28 is our average cost, 1.5% of the portfolio is in 3M, down $2.66 today, down 235 total. Dividend King as well, J&J, my favorite stock of all time. 2 shares, about $300 of equity, 135.79 is our average cost, 1.5% of the portfolio is in J&J, down $3 today, up 24 total, or up 9%. Then we have Target, another king, 10 shares, $1,100 of equity, 87.68 is our average cost, 6% of the portfolio is in Target, up $15 today, up 256 total, or up 30% on this position. Then Exxon Mobil, I bought some of them last month. I bought 24 shares more, so I have 56 shares total, $2,400 of equity, 57.92 is our average cost, so we're still down on the stock, which is good. That means I have another buying opportunity, and I can cost down average on the stock. 13% of the portfolio is in Exxon Mobil, down $57 today, down $7.90 total, or down about 25%. Then the newest additive to the portfolio, I impulse bought today. I don't do that very often. I was kind of having a bummy day, and I'm like, you know what? I could buy Walgreens. I looked at the ex-dividend date. I was going to get paid early enough to buy Walgreens, and, you know, I wanted some Wells Fargo. I saw that it was down. I have nearly 40 shares of 39 shares. I do want to transfer more money and get that to an even 40 because that's going to bother me. About $1,000 of equity in the stock. 25.62 is our average cost. Sorry guys, I'm tired. It's like 1 a.m. About 5% of the portfolio is in Wells Fargo, which is awesome. Down 198 today, and I bought it today, so I'm down about $2. But with this purchase, so I did buy it today. I did add about $19 more to my passive income, and I haven't added that to my board yet. So I will post that on Instagram for those of you who are interested to see where I'm at. But I know I have about $66 of income, 36912. So with that $18 added, I'll be at 76, 7, 8, 9, 10, 11, 12, 13, 14. So about $83, $84 of passive income for 36912, which means that the next set I have to buy for this month, so the next time I buy for this set of months, wow, said that backwards, I will be over my yearly goal of $100 a month, which is great. So right now, the first set of months is paying me about $87. The second, which is this month, is paying me $123. And then next month, which is why I'm buying Wells Fargo, so this purchase will be added to my dividends. I added about $20 of passive income today, per payment too, which is awesome. So I added about $80 a year to my passive income, which is phenomenal. So that set of months is now paying me about $80 and some change. So, or a little over $80. So I'm at 80, 120, and then 80 again. So before the end of the year, the first set of months will be paying me over 100. The second set of months will probably be close to 150. And then this set of months, which is the 36912, will be paying me over $100 as well. I will make sure of that. That was the goal for the end of the year, which is great. Because I'm 24, I'm turning 25. So before my birthday this year, I will be making $100 of passive income coming in every single month, which is phenomenal. Next, we have Dominion Energy, 2 shares, 155.46 is our equity, 80.52 is our average cost. I do want to buy more Dominion. I just saw a really... Oh, sorry, let me go back. Sorry, I know I'm jumping around. It's late. But here's the crazy thing with Wells Fargo. It just popped in my head. So I bought 40 shares, right? So it's pretty low right now. I bought it at a great price at $25.57. Really close to the bottom. But it's more than double. So like so the price is cut in half. So I can double my money in Wells Fargo. So not only am I getting that $20 of passive income every single 36912, as long as it doesn't cut the dividend or I can double my money. So I have $1,100 of upside in this stock. I put $1,000 in. So I bought it at half price. So I have the appreciation of the stock plus the dividend and the dividend growth. So that's phenomenal. So sorry, anyways, guys, I just popped in my head. So Dominion, about 1% of the portfolio is in Dominion stock. 42 cents down today, down 5.57 total. I do want Dominion to be a pretty big position. One of the staples for 36912 because I love utilities. I mean, everybody's got to pay their electricity, right? So it's one of those never going to go anywhere stocks, in my opinion. Next, WBA. Sorry, buddy, I bought Wells Fargo. So one share, 41.10 is our equity, 54.60 is our average cost. So we can cost down average very well here since it's a very small position. Some of those bigger positions like Altria or Abbvie, AT&T, buying a share isn't going to do much because I bought in bulk, which is fine. I don't mind it. That's kind of the strategy, is to buy in bulk when they're low and then rake in that higher dividend yield. So this is 100% would be a great buy right now. But I saw Wells Fargo and I wanted to take advantage. But right now it still has about $23 of upside per share if I bought it here. So Wells Fargo just had a little bit more upside than WBA. And who knows, I might transfer more cash over because I have 3 more paychecks coming in this month. So I bought this really early. So I could have bought Wells Fargo at like the 25th of this month and been fine. So I just was premature bought. I was having a bad day today and I was like, you know what would make me feel better today? Passive, more passive income. Then we're to the watch list, Kimberly-Clark. When it comes to Dividend Kings, I really don't care about the price. So buying Kimberly-Clark, buying Wells Fargo. Wow, I really love Wells Fargo right now. Buying Illinois Tool Works, sorry. JP Morgan and Chase with the upside potential of at least $50 right now. Definitely a buy. Buying that, I have like $90 of upward potential in that. Buying it at, with about $10 to $12 of, $12 to $15 of upside in that. Colgate, about $10 of upside in that. $9 of upside, so yeah, I'll take it. And it's a king. Buying it, it's a king. McDonald's, I'm a huge fan. I'll buy it anywhere under 200. So at 180 is great. IBM, anything lower than 130, I have $20 to $28 of upside potential in it. So definitely buying IBM at these prices. Home Depot, 223. Yeah, about $22, $23 of upside there. So yeah, definitely buying it. Then Public Storage, anything under 200, I have $60 of upside, so I'm definitely buying PSA. And then Waste Management, over $20 of upside potential in Waste Management as well, so definitely buying it. So everything on the watch list is pretty much a buy right now. It's almost all red, and if it's not red, then it's still at a price that I would buy it at. So anyways, guys, we bumped up the passive income by nearly $20 today. Sorry, I didn't record that. I bought it literally right before work, so I was like, oh, should I? It was like, I bought it before the market closed, so I didn't have time to record it. I literally bought the stock, clocked into work. So next time I purchase, I will make sure that I do it and you guys see it. So because that's just more content and more views, and it would have been smarter to record it. But anyways, thank you guys so much for watching. Sorry, I know I was a little rambly and kind of off here tonight. I'm super zonked. Work's been kicking my butt lately, but I promise to do daily videos. I'm trying to do my absolute best, so bear with me if I'm a little jittery or tired or whatever, sluggish. I just want to say thank you so much for all of the Instagram traffic I've been getting. I've been talking to a lot of people on there, and if you want to follow me on Instagram, it's the same handle as the YouTube channel, guys. That Dividend guy. Feel free to DM me, message me personally, talk to me about stocks or why I bought this, why I bought that, my journey investing, why I invest. I'm an open book, so if you want to talk to me personally, go ahead and hit me up there. And if you haven't subscribed to the channel, I will be posting a video every weekday, Monday through Friday, as long as the market is open. Unless it's a holiday, then there's no point because it'll be the same video as I did the day before. But I'm going to be as consistent as possible, and I will let you guys know when I take a break next time. Sorry, I was just burned out. I got, work was crazy. But thank you so much for watching. I will see you guys tomorrow night with another, well, you guys see these during the day, but I record it at like 1 o'clock in the morning the night before. So I'll see you tomorrow with another dividend investing video. Take care, guys. Thanks so much for watching. I appreciate it.